Kitco Mining's on-site coverage of the Vancouver Resource Investment Conference is presented by Discovery Silver.
Hello and welcome to Kitco Mining with me, Paul Harris, here at the 2026 Vancouver Resource Investment Conference. Copper is flying and Chile will soon have a new president. Joining me to discuss this today is Aurora Davidson, President and CEO of Amerigo Resources. Aurora, welcome to Kitco.
Thank you for having us here, Paul. A pleasure to talk with you.
The pleasure's all mine, believe me. I've been wanting to interview you for quite a while because in addition to being a copper producer, you've got a very unique business model, and I'd really like to sort of get into that and learn more about that. I think it's fascinating, and for our viewers, it means your share price is growing considerably. You've got a very attractive shareholder returns policy, all things obviously that investors are looking for. We have a lot to get into. You've got a relatively unique business model, which is to process the historical and fresh tailings from Codelco's El Teniente mine in central Chile. How did this relationship come about? What's the history there?
Sure. In general terms, this evolved from a very practical need. El Teniente is one of the biggest copper operations in the world. It has been in operation since 1910, and it has produced a significant amount of tailings. So it already had decades of historic tailings with residual grades that were interesting, but it is still a huge operation that continues to process and produce tailings, which we call the fresh tailings, from its daily production. So the opportunity of working with that huge volume of fresh and historic tailings was almost something that El Teniente couldn't ignore, and they didn't. At the same time, they are a significant operation that is focused on their own management of one of the biggest copper mines in the world, actually the largest underground copper mine of the world. So diverting their attention, diverting their capital, diverting their expertise into tailings reprocessing probably didn't make a lot of sense. But finding a partner that could do it for them in a way that would benefit both the operator and the purveyor of the tailings was a perfect solution that has been in place since 1992. We have an operation in Chile called MVC for Minera Valle Central, which has been closely associated with El Teniente and processing all of their tailings since 1992. So this is a long-term relationship. With time, Amerigo bought MVC in 2003, and we have expanded the processing capacity. We have invested a significant amount of capital to bring MVC into a position where it could process all of the fresh tailings that are produced by the mine, and also have additional capacity to process the historic tailings that I made reference to before. So we've been doing that as a company since 2003, and 10 years ago or so, we completed a significant expansion that has allowed us to reach very consistent operations. We produce the equivalent of what a mid-sized copper mine produces, north of 60 million pounds per year. So we're not an operation that is not producing a significant volume. We are recovering copper from those tailings, and we are essentially allowing El Teniente to monetize their tailings in a very productive way.
I had the pleasure and privilege to visit the operation before COVID, so I think that was 2019. Mm-hmm. And in terms of a mining operation, it's as simple as it is. The rock's already crushed and ground. The fresh tailings come in a slurry, in a channel straight into your plant. The historical tailings, you basically water wash those down into a similar sort of channel to take into a plant. So the process is about as simple as you can get, and obviously Codelco, El Teniente's already done the work of making the big rocks small. In terms of the relationship between the company and Codelco, as you say, it's a sort of joint venture relationship. So how does the joint venture stack up?
It is not a legal joint venture. We have a long-term agreement where we have the rights to process the tailings and where we provide them with a royalty for letting us work with those tailings. So the tailings never become ours. They basically do a bypass into our plant, the plant that you were mentioning. They come from the mine, they bypass into the MBC plant. We reprocess them. We produce a copper concentrate. We also produce a molybdenum concentrate, and then we return the tailings to El Teniente. And for letting us work with our tailings, we provide them a royalty. So we are partner economically through that royalty agreement, but we're not legally a joint venture.
And all the environmental liabilities about storing and disposal of the tailings, that stays with Codelco?
The environmental responsibility for the tailings outside of the MBC plant is theirs, and the environmental responsibility for operating within all the safeguards and the regulatory obligations within the plant are ours.
Okay. Now, mining businesses, as copper mining businesses in general, are always looking for reserve replacement and growth. There's a shortage, a deficit coming in the copper supply. Chile has been producing copper for over a century, so the Chilean government put out a report a couple of years ago about the various copper tailings deposits throughout the country. Right. Companies are always looking for growth. Do you see opportunities to perhaps get involved in the reprocessing of tailings at some of these other areas of Chile?
We do not seek growth for growth's sake. What has really worked in our relation and in our operation at the MBC plant are several factors. One of them is the long-term nature of the relation. As I mentioned, the relationship has been in place since 1992. We have many years of additional relationship in front of us through our agreement, and we expect that we will become the partner of choice to continue working with those tailings for the full duration of the life of mine of El Teniente, which is 2080 or so. So when you have a business that is based on such a long-term business relationship, you have one of the key elements for it to be successful, because you're not looking at short-term decision-making. You all are aligned in a strategic way to make things work for both parties. The other part of the equation when you're talking about tailings is that tailings by definition is going to be a low-grade material. It is a residual amount that's coming out of the mine. So the other part of the equation that you need to make this work in a business way is volume. And volume then becomes a critical component. The volume of tailings that we get from El Teniente is significant. We're getting around 130,000 tons per day from their fresh tailings. And then we have years of historic tailings that we can process as well. So, what other things do we have in place in the current setup that become by de facto part of our investment criteria? Location. When you're talking about a tailings operation, you have to be very sensitive about the geographical location of the mine, the processing facility, and the tailings deposit. In the case of MBC, they are ideally located. We're getting all of the fresh material by gravity. The mine is located up in the Andes Mountain. We get it by gravity. We bypass it into the plant, and it goes by gravity into the tailings deposit. So that is a key component that makes this operation economical. So if we're talking about future situations where we could have the volume, where we could have a geographical location that works well and that makes the project economical, and we're talking about a potential alignment of interests between the owner of the tailings and ourselves as operators, then of course we're looking at those opportunities in the future. And I think that as we are reaching copper prices that are $6 per pound right now, there is a new economic incentive for the owners of tailings to look at how they could monetize these tailings. It's not the same thing to monetize tailings at 80 cents per pound, which is when we started doing that at Amerigo, than to do that at $6 per pound.
Well, digging a little bit deeper into that, Aurora, what's the sort of head grade or sort of cut-off grade that you use in your operation?
In terms of a historic tailings, it varies from year to year. It's around 0.2%, 0.27%, and the fresh tailings are around 0.18%. So it's low grade. It is a metallurgy challenge to work with such low grades and still recover copper, but we've been doing it for a number of years, and we pride ourselves in that expertise that our team at MVC has developed.
As you say, it's $6 per pound. That makes it worthwhile doing that.
Absolutely.
Now, your business model obviously has a long life. You said, I think 2080, the tailings, you've got the access to the tailings, or there's the amount of tailings to extend to 2080. You've got the profitability. Obviously, they're both key things that are very attractive to shareholders. And you've had a very attractive shareholder returns policy. Your yield in recent years was about 10%. Obviously, the higher copper price has made your share price a lot higher, so that yield has come down. But you've still got a very attractive shareholder returns policy in terms of dividends, special dividends, and a shareholder buyback. Tell me about that policy and how that's perhaps evolving as the copper price moves higher.
Sure. We rolled out what we call our capital return strategy, or CRS, at the end of 2021 for one reason. We had reached a situation at MVC where we were not capital intensive anymore. We had grown the operation to process all of the fresh tailings and the historic tailings. We had done that expansion through debt. And we were in a position where we could refinance that debt and remove the shackles that you always have when you're in debt-paying mode on returning capital to shareholders. What we wanted to create was a policy that could work well with the cyclicality that will always exist in the copper sector, and that could provide a stable base, that's the quarterly dividend, but also have mechanisms that could be triggered when copper prices rise, as is the case right now, for additional distributions to shareholders. So we have a base dividend. We pay it on a quarterly basis. We increased it 33% at the end of 2025. It's now double the dividend from which we initiated the quarterly dividend rate in 2021. And in terms of additional distributions, which are the buybacks and the special dividends, we call them performance dividends because they're tied up to the performance of copper price, we've been very active. We have retired 14% of our float since we started the capital return strategy, and we have declared special dividends in 2024 and in 2025.
With the copper price at $6 per pound, companies will very soon be reporting their full year 2025 results. I imagine your results are going to look very attractive for the full year. And going forward, if $6 per pound continues throughout 2026, and maybe even continues to grow, how do you see that policy evolving? Will it just be sort of ramping up the special dividends? Do you intend to continue buying back the stock, or as your share price increases, is that less attractive?
It is still attractive. It is still attractive for us to buy back our stock. We have a minimal commitment of not having share dilution year on year. We don't issue shares other than for the exercise of options that are in the money. We don't have any warrants, so at least the shareholders are reassured that there will not be dilution on an annual basis. Last year we did more than that. Last year in 2025, at already high copper share prices, we retired more than 4 million shares. So we're active in the buyback activity right now. We increased our quarterly dividend in December. I don't think that there is a near-term quarterly dividend increase, but that's why we have the special dividends and the buybacks.
Okay, I know a number of people that own your stock and they hold it in their retirement accounts because of that long-term nature of the business and that sort of 5 to 10% dividend yield. They're looking at it more from that point of view rather than perhaps the share price appreciation. We're here at an investment conference. What sort of conversations are you having? What sort of investors are you attracting here?
We attract investors with sticky hands. We have a lot of long-term investors. We have investors that are yield seekers, that are holding our shares on a long-term basis. There has been some capital realignment within portfolios of our investors because suddenly Amerigo became just had a much more weight than their parameters indicated. So we're getting new investors as well that are coming into this story attracted by the dividend. The dividend and the capital return strategy in a stable and rising copper price environment is very attractive to investors right now.
there's not many mining companies, or at least not in the in sort of junior space, that attract yield seekers. Mining is not necessarily known for giving good yields, so congratulations there. Let's broaden our conversation to talk more about the sort of copper space and the copper space in Chile. $6 a pound, but the majors are buying each other. There's some big transactions on the table at the moment. What's your view on that? It seems that $6 a pound, although it's historical high-level pricing, it doesn't offset the risks involved, the many risks involved in developing new copper mines.
I think you're right. I think that we still haven't seen a clear incentive price. For a long time, everybody talked about $5 per pound as being the incentive price, but it never materialized. And we're still not seeing we haven't been at $6 copper price for that long, but we still are not seeing a significant amount of incentivization. The risks are there. Investing in the mining sector requires billions of dollars of capital. It requires long-term horizons. And we have changing geopolitical factors that are coming into play and affecting how quickly investment decisions can be made. In the meantime, until the real growth occurs, which is going and finding more ways of producing the metals that we need, the growth is coming through M&A.
You're obviously part of the copper space in Chile. In the conversations you have with your sort of colleagues and your peers in other companies, there's a big copper deficit forecast to come. The world wants more copper. There's new demand sectors for copper, such as artificial intelligence and data centers. But as we mentioned, the risks are still very high, and the price isn't yet incentivizing new production. What's the nature of the conversations? Are copper producers worried that they're perhaps not going to be able to provide the copper that society needs because they can't get over the hurdle of the risks involved to be able to make, because new copper mines cost multi-billions of dollars to build. The build time takes 2, 3 or 4 years. That's a lot of risk. It crosses over political and economic cycles. How concerned are copper producers about the ability or not to provide the copper that society needs?
I think that it's a hard analysis game because most copper producers are always seeking that growth profile, right? And growth in the terms of the production headline that you are presenting. So not having the ability at $6 copper price to go out and provide a clear pathway is a preoccupation to a lot of people, but there's caution. I think that we're coming into a cycle that is significantly more cautious than prior cycles in the mining industry. Capital allocation is paramount, and people are aware that the money has to go to the right projects and to the right decisions, and it's just the decision making is not happening as fast as it could, and that is at the same time providing a self-fulfilling cycle where the copper price continues to find a substantial support at the prices that we're seeing right now.
Okay. Chile will have a new president in March when Antonio Cast is sworn in. He plucked Santiago Mon from Los Andes Copper to be his new mining minister, but then he changed his mind and named Daniel Mas as dual Minister of Economy and Mining. That's significant, fusing those two ministries together. What's going on there, and how important do you think that fusion of the ministries or combination of the ministries is?
Well, I think there are two questions there. One, what could have happened that there was a decision-making change in the appointment of someone that had a very strong profile to be a mining minister. I think that timing-wise, his nomination was announced by his company before the official announcement was made, and that created a series of, some discomfort in terms of timing and process with the transition team. I think that is a valid sort of analysis, and they reacted by integrating two core ministries into one, economy and mining. If you think about it, Jose Antonio Cast, President-elect Cast, has made a very clear statement that economy growth in Chile through incentivization of investment and through reducing permitting times are key attributes or key goals that he's seeking. There could be a reasoning beyond the obvious communication faux pas that may have occurred of joining those two critical ministries into a single person just to create a super ministry that will not have to be competing with each other, and being able to advance the core policies of the new government's commitment in the hands of one single person.
Okay. Future President Kast, he's going to be a more right-wing president than Chile currently has. And from what I've been reading, some of his reference points are going back to a previous government that was fundamental in the establishment of the conditions, the investment conditions that has enabled Chile to develop the copper sector it has today. The government that put in the investment law DL 600, for example. Has there been any sort of more precise indications of the kind of things that the Kast administration is going to look to put in place to incentivize more investment or to reduce permitting times?
We were in Chile in December of last year. We had a very interesting series of discussions with experts in Chile that basically commented there is a very structured plan in place that has identified to the level of detail of which person are creating hurdles in permitting in Chile, and creating a re-engineering of people, of teams, of timing guidelines, and of cross evaluation of permits by different sectors of the government, to basically just avoid that over permitting that in Chile has a name. It's called permisología. And permisología has become a science of its own. How do we study the granting of a permits, and how cumbersome has it become that everybody knows where the problems are, but no one has been able to attack them first. So I think that from our understanding, this is not a policy vision without a very tactical approach of how to really interfere and clear the areas that are creating the hurdles in Chile. It's absolutely necessary to have those revisions. We're not only talking about new projects, we're talking about permits, for minor expansions. We face those issues ourselves with our small optimization projects, etc., where you would like to be able to act significantly more rapidly and implement your capital significantly more efficiently than you can when you have all that hurdle surrounding your ability to deploy that capital.
And this, of course, is within the context of Chile's overall copper production. It's sort of stagnated and perhaps even dipped in 2025. And I imagine that's quite a concern for the government.
We need to reverse that. We need to reverse that and bring Chile. It is the world's single most significant producer of mined copper, but we need to strengthen that and incentivize projects in the country.
Okay, let's end talking about Amerigo again. What are some of the catalysts for the company for this year? What can our viewers expect to see coming out of Amerigo this year?
The single most significant catalyst is meeting our production guidance. We released our production guidance last week. We have a guidance of 63.8 million pounds of copper, 1.5 million pounds of moly. Achieving that operational stability in a strong copper price environment is key to continue deploying our capital return strategy. We are also very focused on cost management. We are very levered to copper prices, but we have to protect our margins. We always say that we produce copper and we produce margins, and we can return that free cash flow to our shareholders quite rapidly through our existing programs. So we're going to continue doing what we've been doing for the last years, which has been very successful for the company.
Well, I wish you the best of luck there. Aurora Davidson, thank you very much for joining me today. It's been a pleasure.
Thank you, Paul. Really appreciate it.
And we have a lot more to come from the 2026 Vancouver Resource Investment Conference. So stay tuned and hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's on-site coverage of the Vancouver Resource Investment Conference is presented by Discovery Silver.